I find it fascinating how people apparently have the same kind of opinion, yet always fight about, should I buy Bitcoin, should I sell Bitcoin? Some people say you should never sell your Bitcoin, just always stack sats. Others try to ride the wave. I think in the end, the only thing that matters is there's a mismatch in the time horizon. In this video, we're going to look at 3 different time horizons. We're going to look at the very long term of Bitcoin. So where's Bitcoin going to be, say, in 10 years from now? We're going to look at the cycle length, so let's say 3, 4, 5 years, and we're going to look at the fluctuations within this cycle. And there are different implications depending on your time horizon. If you're just holding for the next 10 years, you can pretty much just set and forget. If you're riding the cycles, things can become a bit more complex. If you're trading even more actively, there are some indicators that might help with that trading. The nature of Bitcoin clearly has changed in the last years. It is not the retail investor that's pushing up the prices anymore. Now it's the ETFs and it's the Bitcoin treasury companies. And the nice thing about this kind of buyer is that they tend to just accumulate, and in aggregate they tend to not sell. There was a little bit of a brief move in March of this year where the ETFs sold, but in general, right, this is a long-term accumulation. It's also nice to see that the balance that's held by those entities tends to go up faster and faster, right? It took almost 4 years to get to 1 million being accumulated by those entities. And then it just took another 1.5 years to add another 1.2 million. So it seems like the number of Bitcoin that gets accumulated by Wall Street is going up faster and faster, despite the price also going up at the same time. In other words, the money that's flowing into Bitcoin is growing at a faster rate than the Bitcoin price itself is. At the same time, money is flowing from the fiat ecosystem to the crypto ecosystem quite consistently. In the last year, we saw the stablecoin market cap grow by more than 50%. During the same time frame, Bitcoin went up by 79%. So there is somewhat of a levered effect here, right? When money is coming into the space, $1 increases the market cap of crypto by more than $1. The long term truly looks bright. We see 5.5% of the entire Bitcoin supply getting accumulated every single year through the ETFs. And almost every single day we see inflows. We don't see many days where Wall Street is actually a net seller. And so we can simply continue watching numbers like this. We can track them closely, and if over the long term we continue to see the same trend, we can just continue holding Bitcoin. So the long term seems to be solid. I do believe that over the next 5 to 10 years, Bitcoin is very likely going to be higher compared to where it is today. But that then poses the question, since the growth rate of Bitcoin is that strong, since it's going up that much, we might want to rebalance our portfolio sometimes, right? Let's say we start off with only 10% of our net worth being in crypto. And then over time, crypto is going up and up and up, and it's growing faster than, say, our stock portfolio or our precious metals. Suddenly, over time, we might have 30, 40, or maybe even 50% of our net worth in crypto. And that's usually at the end of a cycle, right? When crypto has already rallied very, very quickly. Do we really want to hold 50% of our net worth in crypto when we are high in the cycle? When at the beginning, we start off with only 10%? Probably not, right? We probably want to rebalance the portfolio. And that's then where we have to analyze the cycles. So I disagree with the idea that we should always just stack sats and that Bitcoin is the hardest of the monies and that we should completely ignore the volatility. I don't think that's realistic if our net worth is somewhat significant. Of course, if we just play with a little bit of pocket money, we can stand those 60, 70, 80% drops. But if we've got, say, 10 years of our income in net worth, and we've got all of that in crypto, and then suddenly that crashes by 80%, suddenly our 10 years net worth become 2 years, we can't really make that up again, right? We can't really just save our way out of that hole. We can't just have a high savings rate and then get quickly from 2 years net worth to 10 years net worth. That's not possible. Thus, once we have more capital, once our net worth grows with age potentially, then we also have to diversify more. And ideally, of course, we want to do the rebalancing when Bitcoin's price is comparatively high and when we've got a lot of money, relatively speaking, in crypto compared to the other asset classes. And so that then begs the question, right? When are we potentially at the top of a cycle peak? Now, historically, and I do believe this will continue to be this way, we tended to see a cycle peak whenever there was a lot of attention on crypto. So let's say Bitcoin hit new all-time highs all the time. The media notices that, then maybe talks about it. Then a lot of new people come in, right? So for whatever reason, whenever an asset price is going up and is very high in price already, then everybody gets interested and is wondering, should I also buy Bitcoin, right? If your taxi driver suddenly asks you about whether or not he should buy Bitcoin and he never does anything of that sort, then maybe it makes sense to sell. But have a look at this. This is the HODL waves, and this is a specific selection of the HODL waves. What we see here in colors is the Bitcoin in percent of all of the supply, the Bitcoin that has not moved for the last 6 months. So as per tendency, those are the long-term holders. When this is very low, it means the Bitcoin price is very high and the long-term holders took profit, again to probably rebalance the portfolio, or maybe just to realize some gains, maybe use this for consumption. Whatever the reason is, right, as the price goes up, the long-term holders tend to sell this to the short-term holders that just heard about Bitcoin in the media and that are wondering, should I buy Bitcoin now? Those people then tend to get burned, right? The taxi drivers of this world that buy at the peak, they then lose their money. Nothing against taxi drivers, right? This is just an example of people that are potentially not that interested on average in risky investments. But the idea is the following: as the price goes up, the long-term holders take profit and the rally might potentially turn around. And so the question now is, as we are at 120K roughly in Bitcoin, are we heated in the market? And I don't think that's the case, because the long-term holders still hold a large fraction of Bitcoin. It's close to all-time highs actually. And we want to be in the market when this is high, right? When most of Bitcoin is held by the long-term holders, that means that the selling pressure is rather low. When a lot of Bitcoin is held by the short-term holders, then just a little bit of volatility might already shake out those short-term holders. Because the short-term holders get into the market because they want to ride the current wave. If the current wave doesn't continue, they just panic sell. But the long-term holders, they have stronger hands, right? Per definition. And so we want to be in the market when the long-term holders dominate the supply, because they tend to not sell that quickly. And currently, a lot of Bitcoin is still held by the long-term holders. This is good. We can also look at the realization of profit. So we're not looking at the holding, we're looking at when does Bitcoin get moved. Now we're looking at the short-term holders, so how much Bitcoin has been moved by the wallets that have bought Bitcoin within the last 6 months. And again, of course, this peaks whenever the Bitcoin price is high. It peaked a bit when we were at 72K. It peaked again a bit when Bitcoin was at 100K. But now we are still comparatively low. We are not at those cycle peaks that we saw in 2021, right? When then Bitcoin subsequently went down by 70%. Over here in 2017, when Bitcoin went down subsequently by 80%. We are not at those peaks for sure, but we're even not at the 100K levels. So the market is less heated now at 120K than it was when we were at 100K. Isn't that fascinating? So if we're considering to rebalance our portfolio, today is probably not the best day. 120K seems to still be comparatively low. The long-term holders still own a lot of the supply and the short-term holders aren't moving their Bitcoin that much. So we've talked about 2 time frames, right? The very long term, as in there's accumulation by the ETFs and the Bitcoin treasury companies, and there's money flowing in through the stablecoin market. The medium term, as in the cycles, right? We are probably not at the cycle top because we don't see that much short-term speculation yet, and a lot of the supply is still held by the long-term holders. But what about the very short term? Is there maybe a short-term possibility to take some profit, maybe in the next days, potentially the next few weeks? Here are 2 useful indicators I use to answer that question. It's a long-term holder spending chart. So the long-term holders tend to distribute whenever we are at a medium-term high in Bitcoin. So that was at 72K. That was also at 100K. And they tend to buy when Bitcoin is rather low. at 57k in this instance. They have bought again relatively high, but now they're starting to sell. But they're not yet at the levels that we saw at 72k and at 100k. Thus, I will wait further. I think Bitcoin has more room to go up until the long-term holders have similar selling pressure to November of last year or March of last year. Very short term, the market is starting to get somewhat heated, but we are not yet at the reflection point, if history is any indication. And here's the second chart I like to use for the short term. It's a measure of how much dry powder is on the side. So how many stable coins do people have in their wallets? Stable coins are usually used for active speculation, and when there's a lot of stable coins in the wallets, that means those stable coins might get deployed, and crypto prices are rather low. If a lot of the stable coins have already been deployed, the stablecoin dominance is on the lower end, the crypto prices tend to be quite high and they might short-term retrace somewhat. And so this is that stablecoin dominance. How much of all of crypto in percent is currently in stablecoins? This peaked at around 20%. We initially had a very nice wave of adoption, then we had a consolidation, and in the last 1.5 years, we are trading in a range between 5% and 9% of all of crypto being in stablecoins. Now have a look at the inverse correlation with crypto prices. When the stablecoin dominance is going up, that means that Bitcoin tends to trend downwards, right? This was a correction of 27%. When then those stablecoins get deployed, the dry powder is leaving the wallets, the stablecoin dominance is going down, then Bitcoin can rally. And in this case, it was a 2x. Then again, all of the stablecoins were already active. People tended to get risk off again. The stablecoin dominance went up and Bitcoin retraced by 27%. Currently, we are in a rally again. The stablecoin dominance is going down and there's still some way to potentially fall to 5%. We are currently close to 6%. So let's take this data point, this comparison over here, right? We are currently at very similar levels to Christmas of last year. Let's say we see the same kind of stablecoin deployment again, 1 percentage point. How much did Bitcoin appreciate during the time? This is the answer. It's roughly 10.5%. And if we take the current price that we're trading at and we add 10 to 10.5%, we are getting to a price target of $129,000 per BTC. So at 129k per Bitcoin, I think it makes sense to take some profit if you, of course, are in this somewhat short-term, medium-term trading game, right? If you're okay to buy and sell Bitcoin within just a few weeks, if you're not just stacking sats over the decades, then I believe the 128k is at least a price level where a lot of the dry powder has already been deployed, people are already risk on, and where any potential bad news could depress the Bitcoin price by quite a bit. And so it's all about just finding ranges, right? Trading ranges. And I believe that the stable coin dominance is a quite nice stable range. And currently, again, we are still in the bull market, but not taking partial profit at this point, I believe, is a mistake if you're more active, right? If you want to avoid those 25, potentially 30% drops that Bitcoin sometimes has, even while the ownership of Bitcoin is still mainly in long-term holders' hands, right? The overall cycle is still clean. We're still going to appreciate, I believe. Money is constantly flowing in, but there are some short-term fluctuations that we can potentially use to our advantage as well. Now, I'm trying to approach this channel here slightly differently to other crypto YouTubers. Most crypto YouTubers, they take money from other crypto projects, or maybe they buy into a small crypto project. They have some vested interest and then afterwards promote it on the channel, and then potentially with all of that additional interest, which pushes up the price, they then dump on the following. I never do this. I never promote any individual cryptocurrency that I previously bought. I also never take any money from any crypto project. I try to be as neutral as possible. I try to have no conflict of interest here. Most other channels also don't show their trading history, as in how successful are they. And they're also not willing to share the trades in real time, maybe allow for copy trading. But I'm willing to do this. This is my personal return, so that's the black line, relative to if I had just dollar cost averaged into Bitcoin. That's the light gray line. This is a monthly chart, so this is roughly 4 years of data, a bit less than that. And this outperformance here comes from relative valuation bets, right? We talked about this several times on the channel. Most altcoins tend to do worse than Bitcoin most of the time. And we can make money from that, right? From all of that token inflation. When the insiders dump on the retail investor, when the KOLs dump on the retail investor, when the early venture capitalists, when they get their token allocation and then dump on the retail investor, then there's actually a chance to make money from that by betting on the altcoins to do worse compared to Bitcoin, Ethereum, and Solana. Because Bitcoin, Ethereum, and Solana doesn't have that much token inflation. All those smaller, crappy altcoins do. And so long term, they tend to just do worse. And so I made a lot of that outperformance with borrowing and lending platforms. So I borrowed a bad altcoin and then swapped it into Bitcoin, Ethereum, and Solana. That's how I made this delta. I then moved over the strategy to perpetual futures. I did this for 2.5 months. And that worked out even better. I did this with some experimental money, 40K, and it returned almost 50% over those 2.5 months. Of course, there's some volatility in this, but still 50%. And so as I did this and as I shared my trades in real time with the premium members, I got more and more requests. Can't I just open a capital pool? I deposit to that pool and you do the trading for me. And I finally just started that. So this is now 6 days ago. We started the copy trading vault. It's already up 3.5%, but of course we don't know how this develops long term. We are now moving more capital, but I'm offering this to the annual subscribers of premium. So there's a dedicated tutorial how to deposit to the Bitcoin strategy copy trading vault. That's on the platform called Hyperliquid. It's an 18-minute video. It explains everything step by step. And then you don't have to follow the individual trades that I share, but instead you just get the exact same performance that I get. Both the gains, but also potentially the hard times. Nobody knows how this is going long term. It worked very well with borrowing and lending platforms. It worked very well on my first test initially. And I'm working hard that it will continue to work as I'm trading with your capital. But yeah, you can still execute the trades yourself. I'm still sharing this all in real time in premium. You can also discuss potential opportunities with the community. Right here are some example trades. But the active approach is for people that don't have as much capital, but that do have some time. So that's for the monthly membership. That's currently at $125 per month. If you don't have the time, then you can simply subscribe for the yearly membership. Then I will send you all the information how to enter the copy trading. And that's for people that have more capital, but of course less time. The yearly membership, by the way, also saves some money, $250 per year. So you're only paying for 10 out of 12 months. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.